Hello fellow option traders, this is Jeff, your friendly neighborhood option guru, bringing you a market update for Wednesday, February 24th, 2016. Got a couple things I'd like to cover today. First off is the state of the economy. It's not looking real good. There's very little growth, if anything. A lot of people are saying we're in a recession. Nobody wants to admit it. At least government or any of the talking heads don't really want to admit that we are really in a recession, but I do believe that we are. And today the market is down quite a bit. I guess if you wanted to hang it on a reason, the reason would be new home sales here, which missed the mark by a bit. They were expecting 520,000 for January and only got 494. So they missed even the lower end of the range here. And then yesterday there was consumer confidence. They were expecting 97, or a range from 95 to 100, and it came up with 92.2. And these must be the people that are watching the presidential election cycle here in the U.S., which is looks like it's going to be Hillary versus Trump. So one is loved by the press and the other one is viled by the press. So it should be pretty interesting. And you know, neither one of them cares what anybody thinks about them, so it's going to be pretty interesting. Okay, and then the rest of the week looks pretty busy with Thursday, these that are highlighted in red, and Friday. GDP comes out on Friday morning at 8:30. And then consumer sentiment, which is different than consumer confidence, I guess, comes out at 10 o'clock on Friday. All right, I want to just take a peek here at another website here. It is called Sector Spyder Etfs. We're going to be looking at this in the coming videos that I make, just to take a look overall at the sectors and see how they are doing, and maybe looking for possibly some opportunities for making trades based on direction or anticipated direction. So we might be looking at those a little bit more. As a matter of fact, we will be. I just haven't gotten my feet on the ground on that quite yet. But this is an interesting web page that you may want to put into your system and take a look at periodically. This is a longer term kind of a deal. So this is, again, I'm out of this doing weekly option trades. I'm doing longer term option trades. So this is even longer term than that, looking for bottoms and tops and looking at, you know, the economy as a whole and who's going to win and who's going to lose, and possibly maybe even being able to pick that out. All right, let's jump over and take a look at the Thinkorswim platform. Here we are with today's data. This is all the indices. Actually, they've recovered a little bit from a couple of hours ago. Everything is down approximately 1%, except for the Russell, which is only about 0.5%. VIX is up to 21.86. Gold is at 24.10, so my long gold call here is doing pretty good. Happy about that one. And this covered call on GLD here, I'm going to be rolling that live here later, a little bit later. How are we doing with oil? Oil's at just down a tad today, still kind of hanging in there. Dollar's at 97.38.5, and $1.10 against the euro, and it's going to cost $1.37 in Canadian dollars to buy $1 US. I know that Canada's been having some inflationary problems, I think, yeah, at least from what I've heard from some friends up there. All right, we have, I don't know if you can hear that, but there's some sirens going off in the background. Still in Florida, plenty of warm air here, so everything's opened up here. It's about 75 degrees, nice breeze, so I'm enjoying it. And this will be the last video, probably, I'm quite sure, before head back up to Ohio on Monday next week. All right, you can see the 3 accounts currently have a rut April call spread on them. It's a 1100 credit spread with 20 points in between. Jump over to the Analyze tab and take a look at that on our risk profile. There's still these old ones in here. I don't know why it does that, but it does it. So I just get these out of here. I did close some today. So here is, let's change this date to April 15th. All right, so here we are with our short at 1100. And we're still around a standard deviation, or at least we were when I opened this up earlier this morning. Like I mentioned, we're recovering even more now. So looks like we might have a little bit of a move up this part of the day, but these particular positions closed today, and I took my 40-cent profit. And we can swing over here to the spreadsheet and take a look at this. It's right here, this row. I had a good tell cancel order in to buy it back at 40 cents, and that executed this morning. So immediately turned around, and my note here says closed the March spread and immediately opened this one. Still gave a lower high hook, and PPS gave a down arrow. With the April expiration, I might have time to condorize this. So if we get any sort of indication, in the way that would work is by going over here and taking a look at the charts. If this stochastic continues down and then gives us a hook up in the next week, let's say, might look at doing a bull put on this and condorizing it and trying to leverage the bear call that I have. And the bear call's here at 1100, so I had an alert set at 1100, and this is the limit order that I put in also to close this out for 40 cents. Here's my orders down here, right down here, all 3 of them. Oh, you know what? I don't think I made these good till cancels, so I'm going to have to modify them. I'll do that later. I'm not going to do that now. Okay, so that's where I'm sitting with this Russell trade. Some of you know I have a covered call that I'm a little bit concerned about looking at what gold is doing today. So we can jump over to this watch list here and take a look at GLD. Okay, so gold gapped up nicely again today. Looks like it's kind of hanging around here. I have a covered call on this, and here it is right here. It has a 115 strike. We're currently at 119. So we have a 115 strike here, and this is giving me a little bit of indigestion here. So our extrinsic, here, let me move this over here. This column is extrinsic, and the value right now, it has $3.14 of time value to it. So if you take that and add that to the 115, you're talking about like 118. And whoever owns that call may be getting a itchy finger because they could use that to buy this stock at 118 and turn around and sell it for 119. They'd only be making a buck on that. It would cost them $3. So maybe not. I don't know. It's getting pretty close. So I was thinking of rolling, and I think that probably now would be a good time to roll. And let's take a look at the spreadsheet again. And here is the GLD covered call. This is the last thing that happened here, and this is the 115. Here's the strike price over here at 115. My return on investment, so far we have collected $1,058 selling calls on this. So I have some money that I can use to roll this up. That's the way that I look at it. This is money in the bank that I have that I can use to keep myself from being called out, because if I get called out at 115, I'm going to lose 5.56% on this position. I don't want to do that. So my proposal here is to go to the to the June 16 119 call for a debit. It's going to cost me $133, which leaves me still up $925. And if that should get called, then I would lose 3.3%. But what I'm doing here, and you can tell that I am slowly rolling this particular position up as gold increases in price to get me back to where I can make some money on this if it ends up being closed out. So I still would be up $925. Can't hardly complain about that. But if I get called out, then I have to eat that because I'll lose that, and I don't want to lose that. So I'm just going to keep on rolling it up, and I've set it up this way in Thinkorswim. I'm not sure that that's exactly how that's going to work now. It was at $1.35. Now I can do it for $1.30. If it'll execute, I would be willing to bet that I couldn't do this for $1.30. It's probably going to cost me a little bit more. So I could make it, oops, wrong way. I could make it like $1.32 and see if I can get out at that. Jump over to the spreadsheet, and we could say 132 here. And oops, that would be minus 132. So these numbers over here pretty much remain the same. It's only like $1 difference, so it's not a big deal. So I could go ahead and do that, and I think I will do that right now. The way that I set this up, in case you like to know how that's done, is I went here and I said create rolling order. So it says, well, how about if we do we're going to buy back the May and sell a June 115. And I said, no, I want to do, what did I say, 119? 119 for $1.30. So this is the trade that I want to make, just exactly like I have it on the spreadsheet. Rolling the 115 to the 119. I'm going to go ahead and do that. I'm going to add a couple cents, a couple pennies to my hit, and go ahead and shoot that out there. And there, it executed. It's right up here. And go over here to messages and see that we did it, and it was for $1.32. Maybe I could have done it for $1.30. I don't know. But anyway, so this is no longer a question mark. I actually did it. And I'll make this rolled as in past tense. Okay, now we're all up to date here, and I'll run this up to my blog site in case you want to download this and take a look at it. So back to our credit spreads. Doing pretty good so far this year, up $773, almost exclusively on RUT credit spreads. Deep and wide meaning, let's go back here and we can just recover this again. Let's go back to RUT. Deep and wide meaning deep out of the money. And here we have a delta of roughly 11, or if we take a look at it on the risk profile with our date set to 3/18, oops, yeah, that is April. We got to go to April here. All right, April. So here we are. And that's the way it is for right now. So I'm going to have to change those orders. And the way to do that, well, this is good tell. No, this is an older one. This was filled. I just want to take a look at working only. All right, so I'm going to change this to cancel, replace, order, and I want to change this to good tell, cancel. I frequently forget to do that. So I'll just go ahead and send that out there, and then we won't have to worry about it anymore. And I need to do that on 2 other accounts. Okay, is there anything else that I wanted to cover? No, I think this kind of covers what has happened over the last, well, since the last video. Oh, I want to show you a little trick here. I had added this watch list for the sector ETFs, and it was, I took the A+ TOS and overlaid it with the sector ETFs, and then everything got kind of screwed up because I wanted different columns. So these sector ETFs from that website that I showed you are right here, and I'm interested long term. So I have 52-week high and 52-week low and IV percentile in here, and you know, the last and percent change, and then a description also, because I don't have all these memorized yet. So for instance, this is the energy sector ETF, and we can run over here to charts, and I'll go over here and say that I want the month chart up here, the month layout, I guess you might say. Alright, so XLE, I need to lock that in to red. Okay, and I got some old drawings on here, so I need to remove those. Okay, this is that old 20-month moving average that I kind of use for the long-term stuff, and this energy sector index here is definitely peeling off. So when we get back into the green here, then I would be interested in going long on it, but for right now it's a little bit too late to catch this falling knife, I do believe. But there will come a day when we start getting indications like back here where things are coming back, and when we turn green, then I'll be bearish or bullish on it, and we can start doing some long trades, just as an example. But anyway, what I wanted to show you was if these get out of order, or if you have several watch lists here, because I have different headings for each one of them, like my A+ list is different than my indices watch list, and it's different from, and all of them are, of course, are different from the sector ETF watch list. So what happened to me was they got all out of order. So what I found here was you just click on this little cog wheel down here to customize the gadgets, You can delete them if you want, but you can just take this and click and grab it and drag it up, and you can put your sector ETFs up on the top, but I want it back down on the bottom, so I'll just move it back down here, and so now it's back on the bottom. So you can swing them around any way you want. I thought that, just kind of stumbled on that. It's not like I discovered anything. It's just a feature that's built into it, and I needed to figure out how to get these in the order that I wanted them, and there it is. Actually, I just was able to stumble on it. It's amazing what you can do if you just persevere. So that's what we're doing here. Long-term trades, deep and wide credit spreads, a few speculative long calls or puts here and there. That's what we're doing. So I'd like to thank you for watching. I'm done with this particular one. Next time I talk to you, I'll probably be in Ohio. So thanks for watching. Have a great week and happy trading.